Good morning, welcome to Morning Outlook. This is Kim speaking on Friday the 24th of July. So before I start on the technicals, just having a look at the fundamentals due out today. We've got UK wise, we've got retail sales, so that's happened. They came in significantly better than expected at 13.9% versus the 8.3%. So we're spending. Where the spending's happening may be somewhere different. Aside of that, euro, well, the euro we have this morning for data, which may affect that at 8:15. We've got the French services and manufacturing data coming out there, 8:15, 8:30. We've got the German manufacturing and services data coming out. They're the two key ones there. Then 9 o'clock we've got the French data as a whole. So we'll get a bit of volatility around those times. This morning we'll see how what's happening there. All expected to, apart from the German manufacturing, expected to be more positive than, well, they're all expected to be more positive than last time, but moving into growth, back into growth there is expected. So we'll see. Now, aside of that, we've got we've got the 9:30, we've got the UK flash manufacturing and services, and so again, key numbers there for the UK at 9:30. And the US at 2:45. Right, that's it. So they've all got their they're all flashing today. Right, let's look at the technicals then. Technical wise, well, the euro's continued its shove up. We'll see how this morning's data affects it, but maybe worth, if you're considering this, to wait until the news is out at 8:30. It is risk. It may be good risk for you, but it's still risk. Looking at the 4 hours here, bit of consolidation over the last 16 hours there, 16 hours ish. It's still got potential. I'm just looking at this, it's touched its daily. Range was tighter yesterday than previous days. It's into a daily pivot here, and well, maybe a simple trend line there for the high side. As we keep on now moving into sort of new highs, we almost need to come back out and just remind ourselves, is there anything else to take into account. We've gone past that 50% retrace, which I had drawn on and I took off because it's too noisy yesterday. Aside of that, well, we got, it's quite a way to the next sort of level of sort of key resistance at 1745, 1746. So that would be my next line of, as I say, I'm just going to pop that on this chart here, which could in turn be a target point there. So not necessarily today, but in the coming days. So there we are. That's the euro. Let's move on to the pound. The pound, both the euro and pound have held up well through the Asian session, I should say, compared to some other markets which have had a bit of a duff in. The equity markets, namely. The pound here, weekly wise, just looking, it's into its weekly 100 again now. It's still hovering around its daily 500. At some point, surely it's got to break this and get back, or say back above it. It's knocking on the door up there. We'll see. Again, 9:30's key was the news there today, so maybe patient, but post 9 o'clock it might just give us some oomph there for a bit of momentum if the figures were to come in good. Alternatively, of course, where it's sitting at the moment is between a rock and a hard place. It may just pitch down. Pitching down at the moment seems to be opportunities to buy on this though, so we'll watch this. There's a trend line across the lows there, not drawn on here of course, but there would be. That in itself may become support if we was to see a blip down today. Okay, dollar yen. The yen's been getting the money, and that's for sure. The yen's the strongest out there. It's beaten the. I mean, if you look at the euro yen, the pound yen, Aussie yen, the yen's where the money's going, and it's which suggests the risk-off sort of nature of this market at the moment, which ties up with the money coming out of equities. And the equity markets themselves have fallen even, whatever. So looking at the moment down to that monthly S1 on the Aussie, it's the biggest move we've seen for a while like this. So solid old move. It may be just, I mean, it must be getting into the oversold situation across many markets or many indicators at the moment. But certainly got the momentum at the moment. It just may slow up as we get into the European session. Right, that's the yen. Aussie dollar this morning. So Aussie against the US dollar hasn't done too bad, although it's put a bearish pivot swing on the daily. So there's a bit of weakness looking there. It has, as I say, it's much weaker against the yen there, and it's certainly here lower highs, lower lows. It's a very soft pair at the moment on the even here. Already hit daily pivot S1, looking soft. They may even continue in this mode at the moment, the Aussie. So another soft look there. Canadian dollar, when it finally loads there. So yesterday came back into that daily 500. Just finding a bit of support. It's consolidating where it is on this time frame. High low confirmed on the 60 minutes, so maybe that is going to soften up a little bit more as well. Commodity currencies are softening somewhat, so certainly the Aussie was there as well, so both those softening up a bit at the moment. As I said, cross pairs, the yen seems to be the strongest across all of those. Looking at the S&Ps, pointed out to me here, we've pretty much had a key reversal day yesterday. It did pitch up on the futures. On the cash market it was a little bit different, but still a significant sell point there. It may not have quite made the key reversal, but certainly the drift of what the price action was doing was good enough. Could see this if this continues running down to its weekly pivot the way it's going at the moment. No divergences on this lower time frames. Just looking to see if we had a bit of MACD divergence or anything. Nothing there. If it did start catching the bid side of things and broke through above that 60-minute 200, maybe the daily pivot could be on play for later. But for now, the equities do look weak. Okay, and that's pretty much it for me. So I wish you a great day. Watch out for that news in a short while. Bye for now.